Hi, everyone. We're going to give it a few seconds to let everyone flow in, and then we'll get started.
Hello, and welcome to Growing Your Business by the Numbers, a three-part series with TGG Accounting. I'm Julie Cranston, Director of the SBDC at UCI Beal Applied Innovation, and I'd like to thank you so much for joining us today. Today's webinar is brought to you by the SBDC at UCI Beal Applied Innovation in partnership with TGG Accounting. The SBDC is funded in part by the U.S. Small Business Administration and the state of California. The SBDC is here to help you start, grow, and succeed in your business by providing no-cost expert consulting and trainings such as this webinar. In addition to our regular consulting on business management and equity funding, we also have been helping our small business clients understand and apply for SBA loans like the Economic Injury Disaster Loan or EIDL program, and also the Paycheck Protection Program or PPP loan. We can also advise on how to administer these loans if you receive them, so make sure to reach out to us if you need assistance. We have a hotline set up and additional resources available. The hotline number is 1-800-616-7232. That's 1-800-616-7232. If you're a tech or life science business, you can go straight to our intake form at sbdctech.org/contact. And we also have a COVID-19 resource guide available at ociesmallbusiness.org. We'll put all of this information in the chat feature. A little housekeeping before we begin. Everyone is muted during the webinar. Tomorrow, the recorded webinar and a PDF copy of the slides will be sent to all participants. There will be Q&A at the end of the presentations, but please feel free to ask questions during the webinar by clicking on the Q&A box at the bottom of your screen. We may not get to everyone's questions, but we will do our best. If we don't get to your question, please email hkhaled@fullerton.edu, and we will attempt to answer them and get back to you. Our program today will be presented by Joe Johnston, Senior Accounting Manager at TGG Accounting, as well as the Director of Business Development for the LAOC region. During his time at TGG, Joe has supported businesses from the startup size through middle market growth and transaction. While industry agnostic, some of Joe's favorite clients have included medical technology and SaaS businesses. Joe has hosted dozens of technical and managerial accounting trainings for accountants and business owners alike to help them understand the power of operational finance. Joe received his MS in accounting from San Diego State University. Joe, thank you so much for being here today. I will now turn the program over to you.
Thanks so much, Julie, and thank you everyone at the SBDC for helping us put this together. Howdy, gang. As Julie said, my name is Joe Johnston. I'm a Senior Accounting Manager here at TGG Accounting, and I'm very excited to be giving you the first part of our three-part series here with the SBDC, Growing Your Business by the Numbers. Today we are going to be covering some very, very tactical operational accounting tactics that we can implement right away in your business to keep more cash in your business, go for profitability long-term, and of course, go for safety in this environment of COVID-19 and post-COVID-19 after the fact, of course. Now, to give you a very brief background on TGG Accounting, of course, in the most basic terms, what TGG Accounting does is we are an outsourced accounting firm. We work with business owners, CEOs, and managers that want to build internal accounting departments so that they can run their businesses by the numbers. Now, of course, any webinar and any conversation in the business environment today has to start out with a conversation on COVID-19 and where we are. Looking outwards, of course, right now, we're entering into a state of a survival conversation. Business owners, ever since mid-March, when we got our stay-at-home orders from Gavin Newsom and from the rest of the counties throughout the state, really, we've been looking at how are our businesses going to survive? What are we going to look like here, whether we're in full operations or really in a startup mode? Where are we going? But I'm here to tell you that with the right decisions and taking the right path forward and action plan, we can survive and thrive and get through this together. Or at the very least, make sure that we're improving our chances by taking all the right steps. Now, circling back to where we were at the start of COVID-19, of course, in November, December, January, and into February, we were getting reports of factories being shut down in China and overseas in Japan and Korea, and that started to percolate and come into the United States when the disease reached the US. And when we got our shutdown orders in mid-March, businesses really started to freak out, and there was this overwhelming feeling of us all being screwed, really, in terms of the economic outlook. And we started to notice that new reports on COVID-19 were really the drivers of our economy, whether up or down. Harvard Business Studies started to take a closer look and saying, when we're starting to see less COVID-19 cases might be the upturn in our economy. And in this case, at the very least, it's certainly been a status for a buying point for reopening certain businesses. In this environment, we've seen unemployment. We've seen higher unemployment in a very short-term time. I believe this morning I read that over 20 million people have applied for unemployment in just the past few weeks, which is the fastest turn we've ever seen. And we may be seeing upwards of 20% to 40% unemployment coming forward. We're seeing corporate profits and corporate expectations going tremendously down as purchase indexes are dropping. We're seeing lower production. We're seeing customers that are holding onto their cash to maintain their own security.
Hey, Joe, sorry to interrupt, but your mic is cutting in and out. Maybe you could call in.
Let's go ahead and give that a try, team.
Okay.
Excuse us for a second. Pardon me, team, for just a moment while I get myself called in here, suffering from some technical difficulties.
I sent you the phone number and your participate ID and your webinar ID in the chat box, if that helps. Sorry, everyone. Thank you for being so patient. We'll be back up in a minute. You are on mute. If you are talking to me, you're on mute.
All right, team. Can you hear me okay now?
Yes, perfect.
Tremendous. Thank you again for your patience while we were getting that technical aspect taken care of here. Back to our presentation. Folks, when we're taking a look at the economy overall, I know we're starting to get reports even from San Diego County about opening up tier 2 reopenings, but the reality is that we still have 5 billion people across the planet that are just not living their daily lives in the way they normally would. We're starting to see mass unemployment, and something very similar to the recession that we saw 12 years ago, and of course, similar to the Great Depression all that time ago into the 20s and 30s, where we're looking at a longer term recovery. We're seeing large amounts of government debt, large stimulus being pumped into the business environment, of course, through the CARES Act and through other resources. But what we really want to do here is not take this from a victimization standpoint, but take this as a time to do what we should have always done, which is to figure out how you can survive, how you can thrive by running your business by the numbers. And we're going to do this by circling back to something that we can always feel comfortable about at the end of the day. When we can't run by our gut alone in a downturned economy, let's turn to the financials, let's turn to what the data is telling us. And let's make sure that we're on the surviving side of this team. So here's going to be my suggestion for an 8-step process of how we're going to get through this. And we're going to end this with quite a bit of tactical information that you can utilize in your business. We're going to start out by making sure that we have our crisis team built. We're going to start taking a look at disaster planning forecasts, scenario planning, moving into collections planning, monitoring our supply chain to understand how it's moving, setting up an appropriate legal strategy and monitoring on a consistent basis, focusing on cash hoarding, and of course, the classic step, cost cutting. Now, when we're talking about a crisis team, having no one person can be an expert in all fields, and having the right people surrounding you, the right set of advisors, can mean everything. This is the starting set of the crisis team that we would suggest for your business, though depending on your specific setup, you may find other substitutes in here as well. Starting out, we'd suggest having an appropriate business, bankruptcy, and collections attorney. So if we need to start asking ourselves the questions of, when can we start going back into the office? What steps do we need to take with our internal team, with our employees, to make sure that we're following all the appropriate guidance, that we're not in any kind of legal repercussions there, and make sure that we have an appropriate collections attorney, especially if we're working with customers that may be troubled as well. Having a CFO that can look through your financials, have a conversation with you, and make sure that they're helping you make your financial decisions based on your goals is an appropriate step. Utilize your banker to make sure that you understand different leverage options that are available for your business, making sure that you're lending based on your goals, whether that's for inventory, whether that's term loans, lines of credit, short and long term, and even through the government programs to make sure those are appropriate for you. Utilize your CPA to make sure you're taking advantage of new tax advantages that have come through the CARES Act, and really just tax advantages in general and tax planning for yourself and for your business. Make sure that you yourself on a personal level are going to be in a great financial position by utilizing your personal financial planner. And in appropriate situations, having someone like an insurance agent or your business coach, of course, through the excellent team at the SBDC, can be great resources for you and guiding you in all these directions. On the insurance side, having an insurance agent to make sure that as your business landscape is changing in terms of number of employees, working from home versus working in the office, and changing your business environment, that you're insured in the appropriate direction. Maybe that could even be taking a look at whether or not we need to get cybersecurity insurance, or taking a look at collections insurance for higher risk businesses that we're working with. So having your crisis team with trusted advisors is the perfect first step to really kick up the conversation. Next step is taking a look at disaster planning. When we're talking about disaster planning, We want to look at what is going to happen to my business what if 25% of my sales disappear? How does this affect my fixed costs, and am I going to be able to get through? What happens, at what point do I need to make the harder decisions about laying off a component of my workforce or furloughing them down to 25%, 50%, 75%, depending on what's happening in my business, and finding the appropriate times to ask those questions. Then we want to start taking a closer look at scenario planning. When we're looking at scenario planning in general, one of the most important steps in this is monitoring your cash runway, figuring out how many weeks of cash, how many months of cash do we have on hand, so that we can figure out when we need to start making different decisions. A 13-week cash flow, which is a full financial quarter, is a great tool to make this happen. It should be something that you can monitor on a weekly basis to figure out when are the bills coming due, when are my credit cards coming due, how are my customers paying, and start doing scenario planning to figure out what happens in a best case scenario, worst case scenario, and what's going to happen if my business stays stagnant as is. The next step that we're going to dive into quite deeper here is collections planning. Now, when we're talking about collections planning, taking a look at your customers, whether this is through businesses that we've set up on SaaS models and subscription models where we're collecting auto ACHs, or if we're taking a look at customers that are paying us where we're invoicing out and we're collecting over periods of time, looking at collection planning is going to be immensely important, particularly if you're in a med device space where we're putting all of our equipment or if we're putting our products on consignment out at hospitals and clinics. Making sure that we have good collections planning is really going to be critical. Start by putting all of your customers into different grades by AA, single A, AA, and AAA based on quality of collections, just in the same way as a bank would do that for the loans that they're holding. Now, for collections planning, one of the best metrics that we can track is taking a look at days sales outstanding. Days sales outstanding means how many days from the day that I actually perform my service and invoice, the day that I invoice, how long does it take me to get paid? And this can really make or break a business in terms of your cash flow cycle. Start taking a closer look at your contracts. Figure out, do you have things like personal guarantees in there? Do we have interest rates? Do we have early payment discounts? What do we have that we can utilize within our existing contracts? Maybe we should start looking at building those in. When we're looking at our collections plans, maybe if we're working with customers where we're starting to get into higher risk areas, particularly with those single A and double A customers, what we really want to do is start seeing, do we need to add a personal guarantee for particular high risk businesses? Do we want to ask for higher deposits to make sure that we can support if we have questions on collectability, and start utilizing late fees and interest? If we're setting 30-day terms on payments, we should start figuring out a timeline for when are we going to start charging interest at 5%, 10%, and going out further, when are we going to start issuing a stop work time? Having a good stop work plan is immensely important. There's no greater pain in a business than paying whether it's for your employees, paying for your product, to provide that for a customer and then not getting paid at the end of the day. And something very simple that not a lot of accounting departments do, whether you're doing your own accounting or if you're using a service currently to do that for you, make sure that your accountants are developing good relationships with your customers' accounting departments. That's going to make it a lot easier to either negotiate for payment and make sure that you're getting it on time. Something that we can do internally for your business, and this is really taking a look at our own internal processes, is make sure that you're setting a specific, whether it's a specific invoicing timing, whether that's time of the month, time of the week that we're going to be sending out invoices, so that there's no delay there on our own side. And start considering taking other forms of payment if your customers are able to pay you faster. And in most case scenarios, we're going to want to get the easiest way to get paid automatically is going to be through ACH, but we could also start looking at other methods of payment, whether that be through Venmo, through other bill payment options. Now, after we get past collections planning, something, of course, we need to take a closer look at is supply chain. Take a look at who's coming up from your supply chain. Do we know that the people that are, whether they're manufacturing our inventory of our hardware, whether they're going to be manufacturing our surgical implant or whatever our tool is, are we still going to have them at the end of the day? When we're taking a closer look at our downstream supply chain, who's going to be able to be there to work on the next step of our product? Are they still open? Are they still running at the same capacity? Have those conversations to make sure that everyone in your supply chain is still able to complete their task as you're expecting. And of course, inventory planning. I can't tell you how often we come into businesses and we find out that they are carrying vast amounts of inventory that can't sell, that they've been parking on the shelves for months or years even. And really, we're parking our cash there. So make sure that you're doing appropriate inventory planning for your own business based on your needs, based on the timing of when you're actually going to be able to get inventory in and sell it through. Some of this can be monitored by taking a closer look at certain reports, such as inventory to sales reports, to figure out what pieces of inventory you're selling. Taking a closer look at what costs each piece of inventory is going to have for you if you are an inventory-based business. But the same concept can be applied to any other product that you're developing as well. And of course, making sure that we're monitoring this performance on a regular basis. Moving on to our next step, make sure that you're speaking with a business attorney, collections attorney, and setting up an appropriate legal strategy for your business. Now, as I said, we can't all be experts in all things, so make sure that you're speaking with a trusted advisor in this case. But we want to make sure that we're asking the right questions about what are the contracts that we're in? What is our ability to terminate or furlough certain employees if we need to as we're moving along? How do we get out of contracts where we're concerned about, we think they're going to be harmful to us because maybe we're not able to produce at the same level that we were and we need to scale down, whether that be with suppliers or with customers along the way. Now, moving into our next step, cash hoarding. Now, in the 2007, 2008, some of the largest vehicle manufacturers in the United States drew their entire lines of credit to create security for their businesses. And some of the purpose for this was really so that they'd have the cash parachute if sales slowed down, if they needed it for inventory, and we're able to get through them this way. One of the easiest steps to monitor cash hoarding, even just on an operational basis, is to slow pay AP. When we're talking about AP and AR cycle and your cash cycle, I know this may seem obvious for some, but for those that haven't heard this before, I want to collect from my customers as soon as possible. I would love to get my collections immediately. And as it relates to AP and bill payment, we want to pay as late as possible. Of course, without getting penalties that could damage us in the longer term. Let's make sure that we're cash hoarding by monitoring our inventory closely and taking a closer look at really where we're spending our cash using our 13-week cash flow forecast. Speak to an attorney and figure out for certain bills when, if in a worst case scenario, we need to issue stop payments. This is not legal advice, and this is not to suggest that you shouldn't pay your bills, but make sure that you understand what your priorities are in terms of getting those paid. Taking a look at cost cutting and moving into some of these deeper subjects. There is so much that we can do in the short run and in the long run, really to put some cash into our business and cost cutting, and one of these is lease renegotiations. A big question that's come up, of course, is force majeure, whether or not if you're currently working in an office space, if you're not able to access it, whether or not you're able not to pay. And the best thing I would say about this is all of that rent is still going to pile up, and make sure that you're having a conversation with your attorney, with your commercial real estate advisor to give you the best advice there. But at the very least, we want to make sure that we're having proactive discussions with our landlords, whether that's to say, we can't really access the building right now. Can we get discounts on our rent? Can we push back rent? Can we get holds on rent, particularly if we're not able to be there? Now, as it relates to the moratorium on evictions, as we said, there's never changing set of rules on that, so make sure that you're staying up to date on the federal, state, and county level. Loan negotiations. Even if you are currently using an SBA 7A or an SBA 405, it is still very possible for you to work with your bank that pushed through your SBA loan to see if you can get an interest-only payment for several months to figure out how we can keep more cash in the business in the shorter term while we're working through this time period. And of course, one of the most underrepresented cost-cutting factors that we've seen in businesses is really asking for discounts. If your accounting team, whether that be yourself, whether that be your outsourced accountant or an internal accountant that works for you, ask for discounts from your vendors, from everyone who's supplying you, and figure out how we can actually put more money back into our business. When we're talking about, if you're a 10% margin business and you're able to save 5% on your cost of goods sold, we just increased our profits by 50%. All of it goes directly to the bottom line. Next is fees. Let's figure out what we can do with small changes that we can eliminate in the longer term, whether that be taking a look at our credit cards and the credit card fees that we're experiencing on a regular basis. Let's figure out, maybe we should be moving to another card to see if we can get a better rate or a different type of corporate card so that we can get cost back and we can get lower interest or deferrals. Take a closer look at lease and loan fees that you're paying, and of course, bank fees. When we're taking a look at payroll, some of this is going to relate to personal owner payroll. When you're paying, if you're paying yourself through W-2 wages in your own business, then you're paying employer-side payroll taxes right on the front end. And if you're so willing, you can actually take these same payroll, take the same wages out as distributions and avoid that payment on the front end to keep the cash in your business. Figure out where we can negotiate. Take a closer look at if it's freighting for our inventory, if it's technology contracts for our different IT vendors, for our different cloud hosting vendors. Figure out where we can get discounts and don't be afraid to go shopping. If you're a service-based business, let's keep a closer eye on the things that are really driving revenue for our business, including utilization. Make sure that you're getting appropriate accountability within your business. One of the biggest factors in the business that we'll be covering here today is making sure that you're getting accountability in your sales force. Consider outsourcing certain departments and functions. If we're looking at different departments in our business, and if you're only utilizing someone for several hours a week, several hours a month, make sure that you're figuring out what needs to be outsourced and what can be handled internally. Whether that be on the IT side, on the HR side, whatever that might be relative to your business. And of course, later on down the road, and figure out when we need to start having a conversation on layoffs and furloughs for security purposes. In terms of our leases, let's have a conversation if we're leasing things such as commercial printers, other hardware, other large pieces of equipment, or even in our actual real estate. Let's have a conversation about how we can lower some of these lease costs and really just have the conversation. So many of these things can just be fixed with a negotiation. Utilize your insurance broker and make sure that as your workforce is changing, if we're increasing from or trying to attract certain types of talent, let's make sure that we're utilizing our insurance broker, whether that be moving to a PEO, getting direct insurance for your business, and making sure that they're providing at the right cost. And of course, as Julie can speak well to, make sure you're utilizing and understanding government programs that are available, as well as state and local grants and grants unique to your industry. Of course, there is the economic injury disaster loan, which currently can really be tremendously helpful for small businesses that are looking to get cash. Taking a closer look at the payroll tax credit that is available to businesses, and making sure that you're understanding new tax incentives, that we can take a look at net operating loss rollbacks and refiling old tax returns to get those benefits. If you're an independent contractor or if you're a sole proprietorship, these can still apply to you. Make sure you're getting up-to-date information on your payroll protection program, where we're still making these available through government programs. And of course, understanding that 75% of this payroll protection program is intended to be utilized for payroll, with the difference being available to be used for occupancy, with forgiveness being an option at the end of the road. While this may not apply to, depending on where you are in the stage of your own business, the Treasury Department has released the Main Street New Loan Facility, which is going to allow businesses to get more lower interest loans at 3% plus LIBOR over the next 2 to 4 years as well, based on your EBITDA. And again, this is through the Treasury. Now, gang, before we get off the road here, we're going to be circling up on a few specific ways to thrive. And we're going to be taking this from a position of offense and defense. First of all, on the defense side, make sure that you're restructuring your costs to be surround your new norm. Whether that be if you're currently in an office space and we're getting ready to move out of an office space, let's see how we can scale down our costs there. Let's figure out what utilities we're going to be able to remove. Whether or not maybe we're going to consider it a fringe benefit really just to have an office for our employees. Find out what benefits it is that your employees want. For some, that might be student loans repayment, student loan matching, or it might be other specific benefits for your business. And work directly with, whether that be your PEO provider or your insurance broker, to have some of that conversation. Figure out where we can save on our IT costs, whether that be on the hardware side or some of our subscription models that we're using. Don't be afraid to shop. Take a closer look at employee benefits to make sure that those are scaling appropriately based on whether that be the number of employees that we're utilizing and making sure that those are matching appropriately for what they want them to be. Whether that be on the 401k side or other benefits. And of course, something that's a little bit of a harder conversation to have, make sure that keep a close eye on who your overperformers are and who your underperformers are in your business. If one of the struggles that we run into with business owners is sometimes because they really want to keep certain members of their business, they'll utilize almost everyone at, say, 70%. But in reality, if we used our starters every time, our star employees, we know that they're going to go out there and they're going to crush it and they're going to make the client happy and they're really going to make money for our business, whether that be on the actual service side or whether that be on the sales side. And then you start to realize that maybe you're over capacity in terms of your sales force. Maybe we're overstaffed in terms of our actual employees. And of course, take a closer look at outsourcing certain components of your department. This doesn't apply to all business owners, but of course, take a closer look at what your meals, entertainment, and travel expenses are looking like. While those aren't very high right now, in startup, small business environment, particularly those that are going out and looking to market their business, figure out how you can convert some of those tactics to online and Zoom-based or other software-based. And of course, make sure that we're setting up sales budgets with our sales team. Let's use this time to figure out where we can take a closer look at internal processes and build more efficiency. And of course, have strong accounting to drive this in the background. Utilize financial reports to find out what's happening in your business. If we're an inventory-based business, so make sure that we're monitoring inventory to figure out what's selling through, what's stocking on the shelves, make sure that we have enough inventory to get through, but that we're not pumping all of our cash into inventory and putting ourselves in a tough position. And of course, utilize your disaster planning team. Bring everyone to the table and figure this out. Now, depending on your specific business, when there's a downturn in an economy, it also flips the script as it relates to unemployment, as it relates to talent. In my industry specifically, we've had, prior to COVID-19, we had 1% unemployment, and now we're at over 5%. It was terribly troublesome to actually get great quality talent right near the start of COVID-19. But now there's a lot more people, a lot of great talent out there that's looking for new positions, that's looking to come into a business and support it. So this may be the case for you as well. Set objective accountability metrics for your department, whether that be for your sales team, for your development team. Make sure that we're going after these targets, because right now there's a lot of employment opportunity out there, and we want to make sure that we're utilizing the right people for our tasks. Keep a close eye on your culture, of course, and let's make sure that all of our team members are happy and thriving, whether that be your disaster team, whether that be your executive team that you're working closely with, and of course, use the technology and the methods that we have available to maintain your great culture. And something else to consider as it relates to utilizing your starters may be creating performance-based promotions, making sure that we're not utilizing tenure and time-based promotions. Let's make sure that we're utilizing our starters to keep the best employees producing the best work every time. This is an example of TGG and some of our culture maintenance back at the office during our daily push-up and daily lunge challenges. So find the things that are fun for you and for your team to keep employees happy so that we can keep the right people around that we want to. In this environment, there's still a lot of room for, of course, automation. If we have processes in our business that are don't require a lot of thought, but it's data entry, it's clicking buttons. A lot of this can be, whether it be automated or offshoring or inshoring. Let's make sure that we're spending our time on the right thing and managing costs appropriately for these. Let's make sure that we're using all of our intelligent people to do the intelligent tasks that we want them to do. And figure out how we can upgrade our business, provide new products and services, and really come to the table to make our businesses a bit better. And at the end of the day, let's not forget that there's so much out there in terms of our offensive strategy that is really negotiable. Let's talk to our commercial real estate advisor. Let's take a closer look at our lease contracts. Let's figure out where we can save money there. Let's talk to our customers to make sure that we're getting paid on time, that we're setting up appropriate contracts with them. Let's speak with our vendors and figure out where we can get discounts, whether that be based on timing, whether that be based on really tenure, anything that we have with our vendor. Start having that conversation to negotiate. Let's figure out where we can monitor sales closely and have that activity. At TGG, we've converted, as many businesses have, we've converted so much of our activity to Zoom and having Zoom networking and Zoom meetings just like this. If this was 4 months ago, I might be sitting in front of you with a whiteboard. Another tactic that we can utilize that's a bit on the a little bit more on the dangerous side, or the place where you have to be a little bit more careful, is figuring out where you can undercut your competition. This may be something where, if you have a strong enough balance sheet, if you can work through, if you know that you're in a good financial position as it relates to your balance sheet and safety, and working to get market share, figuring out how we can lower our costs by a certain degree to maintain our customers may be a good strategy. But of course, this is all part of running your business by the numbers. Make sure that when you're working with your customers and we're working with other businesses, if you're going out there in the market and you're working to get contracts, for business, whether that be for your SaaS software, and let's say something comparable has been selected by the customer that you were proposing to, figure out who the salesperson is from that other business. If you're constantly going out there and you're losing contracts and you find out that it's the same person, let's figure out how we can hire them and get them on your sales team. Let's take a closer look at customer lifetime value and figure out how we can extend this out and make sure that we're spending the right money to keep our customers. In utilizing discounts, we want to make sure that these are set up in an appropriate way, not only for our customers, but for our vendors as well. Let's figure out, in a short-term cash planning scenario, we can issue discounts to get cash in the door faster, but that is going to affect longer-term profitability. What we're looking out for our customers that we're providing service to, if we're providing a lot of upfront cost, let's ensure that we're setting up, in terms of our payment dates, let's set up late payment penalties that might be 10% at 60 days, 20% at 90 days, and of course, make sure that we're setting up an appropriate stop work time for our business. Let's set up our business plan to survive for the longer term and make sure that we're building customer relationships in this way. And of course, something that we can always do is take a closer look at our pricing, whether that be offering discounts for a certain number of months to get customers in the door and build out for longer term contracts. We've seen clients work out to say, we're going to give you depending on the cost, give you a free implementation for a 3-year contract, to give you a 3-year contract to make sure that we're building out for the long term. But team, I know we've just gone through a lot of very deep tactics here, but and not all of these are going to be eligible for every business. But I hope that you got something great out of here today, some things that you can really utilize for your business. And just know that your starting point really through all of this is going to be your disaster planning team, to have a conversation with them and figure out what actions we can take. If you have any questions about any of these that we're not able to cover here today, of course, reach out to Hannah or feel free to reach out to us at TGG Accounting. All right, with that, I'm ready to take on if we have any questions.
Thanks so much, Joe. I think we have a couple of questions. Let's see.
I have them up.
Got them up? Okay.
Yes. All right. The first question is, will forgiven loan being used into assets or liability?
So if you get a loan and you get it forgiven, first of all, we're going to have it's kind of more on the technical accounting side. So if we have a loan on the front end, a loan is going to be debt, of course. And then if we get it forgiven, this might end up being other income in terms of our forgiven debt, because this is a unique item that we're going to pull in. So good technical accounting question. So in terms of the payroll tax credit, this is an option that's, surely to answer your question, in terms of the payroll tax credit, this is something that is available to businesses as an alternative to our PPP. So this is one or another that business owners can take advantage of. And based on your unique situation, we'd love to have a conversation with you and figure out if this is something that makes the most sense for your business.
Our next question is, would you be able, are you willing to share your email address if someone has further questions?
Yes, absolutely. And here, let me go back to our info at TGG Accounting question as well. So absolutely, feel free to reach out to us here, and I'm happy to provide my email as well. We are a partner with the SBDC, so we're happy to assist and provide a little bit of consulting as you need to. Of course, my email is joe.johnston@tgg-accounting.com.
Our next question is, can you explain iBank loans?
The iBank loan. I'm sorry, did I hear that right?
Yes.
I'm not well aware of the iBank loan myself. The iBank loan may be something that's most appropriate to speak with your banker, with Julie Cranston, but there are an incredible amount of loans out there. That's why we want to have that appropriate disaster team. Speak with the banker, speak with some of our resources here, and let's figure out what's the best leverage based on your business type and based on the goals that you're trying to accomplish. If I could stress anything at all, let's make sure that while getting in debt in the door is very important. I mean, sure, of course, if we want to get financing, but what you really want to do is figure out what your long-term goal is for that cash and make sure that we're financing appropriately for that. I hope that answers that question.
What are the payroll tax credit now?
I think we just ran through that one, but the payroll tax credit is another option that businesses have available through the CARES Act that can get utilized as well. It's something where we can apply amounts directly against our tax credit, but I'm very happy to talk to you about your specific business and mall if you'd like to send us an email.
if I keep the PPP and I know I won't qualify for forgiveness, how is the 1% interest calculated?
Your interest due is going to be based on the amount outstanding that is unforgiven. That'll be due over the loan period. So it is an amount that you'll end up having to pay. What I would say is one of the best tactics you can take is have that conversation with your banker so that they know your situation, they know how you're intending to use the funds, so that you can strive towards forgiveness as much as possible. And for anything that's left over, have a conversation so that they know that the loan is being used for an appropriate purpose. I can tell you that the Congress right now is having a conversation. It's still just at the conversation stages, but about extending out the loan forgiveness period as well for small businesses. So please do stay tuned. One of the great resources for that can be, of course, subscribe to the newsletters for the SBA regional offices, for the SBDC, and for the IRS and FTC can be great resources to make sure you're getting that up-to-date information.
A follow-up question. I am confused how much on 30K monthly interest at 1%.
30K monthly interest at 1%. So interest is, the first thing I would say is when we're talking about loan interest is calculated annually based on our percentage that we're going to have outstanding. So very happy to run through that specifically with you if you'd love to send me an email.
One of my customers filed for bankruptcy. At what point is a bankruptcy attorney worth it?
I'd say it's always worth a conversation. You know, at the very beginning, I mean, even having a cursory conversation with them to understand maybe what your options are, even if that's just on the front end, can be worth it. Especially if you know you have outstanding balances with them that now we're having a question about collectability and where you are in the spectrum of getting paid. So I think it's worth at least a cursory conversation with them.
Is there COVID tax incentives for new investments?
That may be the new case. I'm not aware of them at this time. That's more on the personal financial side. But I would stay tuned to figure out stay tuned with some of those same resources, but that be through IRS, SBA, and through the federal government to figure out where those resources are available. And of course, here through the SBDC.
All right, those are all the questions I have. Julie, oh wait, we got another one. I'm receiving a small grant from the county for COVID compliance. How do I receive these funds as income?
Tremendous. That is outstanding. I've heard about these loans. First of all, congratulations for getting that. I've heard about these grants coming through from San Bernardino County and a few other counties. So in terms of reopening, I'm not sure exactly how the funds are going to be received in terms of cash, but whenever we're receiving these grants, we can't accept them in as income if we know that we're not going to have to pay them back. So grant income will end up being on your P&L. In terms of the actual presentation, that may end up being setting up an other income account because this isn't going to be part of your recurring operations of your business, so to say. So for instance, if we're talking about the P&L of a very general business, if we're talking about McDonald's, McDonald's is in the business of making and selling cheeseburgers, so they're going to put cheeseburger income in their income statement. But if they get a grant, they're probably going to put that down into their other income section. So very similar for your business, unless you're a nonprofit that's in the business of getting and receiving grants.
We received Medicare stimulus check for providing health care. Are they tax-free?
That I am not sure about, to be fair on the front end, but very happy to do some research and get back to you, Shirley. I don't want to give you any misinformation there.
We are a pre-revenue nonprofit that doesn't pay anyone. Are there any COVID benefits we can receive?
And you're a nonprofit and you're not paying anyone, I would say some of your best resources are going to be really having that conversation with your bank, figuring out what's available directly through them, and figuring out what internal operational financing we can do. If we don't have employees, but we're set up on the nonprofit side, let's take a closer look at what operational expenses are and what benefits we can take care of right on the front end with your current costs. That's something that's more universal that I would say every business can do, but I'd love to see how that can operate for you as well.
All right, those are all the questions.
Operational financing, the things that we talked about today, I apologize, the things that we talked about today when we're talking about operational financing, these are things that every business should do all of the time. This isn't, this is, as I believe someone said, this is going back to true basics to say, every business should be working to negotiate. They should be working to slow pay AP. They should be working to get collections faster and figuring out what resources are available. This, what we're talking about, all these concepts of operational financing, this is running your business by the numbers from an operational standpoint and figuring out how we can keep more cash in our business and how we can keep our business more safe from an income statement perspective.
We had someone say last question, so I'm sure they're typing it up. So stay tuned.
Yeah.
Here we go.
And for everybody listening, we'll have segments 2 and 3 of this series in June. So make sure if you haven't signed up for all of them to go ahead and do so. We'll have the founder of TGG next time, and then Joe will be back for the 3rd installment.
Yes. Cost of goods sold for financial services. I'm not sure what the question is specifically, but TD, if you have more specific questions on your business, I'm very happy to chat with you. Please do reach out to us at either through Hannah or the email address that's on the computer on the screen here now. Very happy to chat with you more specifically.
All right.
Okay, if we get one more in, we'll go back to it. We had this happen the other day where I started reading my speech and then some people chimed in. But thank you so much, Joe, and everybody at TGG for making this possible today. I think it's been really great, as someone said, fundamentals, but also good in a crisis. So we know that the fundamentals work all the time. Again, you'll receive the recording and slides tomorrow via email. We will also plan to present additional webinars on topics of interest to tech startups in the coming weeks. If you need immediate assistance with loans or funding, please call our hotline number. Again, that's in the chat, 1-800-616-7232. And we have a COVID resource guide and on our website as well. And if you need one-on-one consulting on your tech or life science business, please go to our website, sbdctech.org/contact, and we will pair you with a consultant. If you have any other questions, please email hkhaled@fullerton.edu or Joe. His email is in the chat. We're here to help you and your business make it through this crisis. So thank you so much for joining us. Stay safe and healthy. And thanks again, Joe. Have a great day.
Absolutely. You all as well. Take care, everyone.